Welcome to TradeTheNBA.com. This is John's report is for the 15th, and well, we're still hugging the highs here for the S&P, and it's slowing down quite dramatically. And you can see the change here from cyan moving up to now even with the red. So we've sort of lost a bit of that momentum as we get into the final period here, and you can see that. Currently, shorts that were increasing, not really doing a whole lot to start off the beginning of European trading, at least. But from even the other day on the Nasdaq, you can see the fade off from it, unable to overtake the broader strength of the overall market. But you can see interesting DOC spread conversion. So that may be a little more softness potentially starting in to begin the week. We don't have orange in between cyan and red. So from that standpoint, you don't have a continuation trend situation any longer. Now we're sort of playing with the probabilities of intraday activity, and that makes a difference broadly. It's still biased to the upside, but I think you're probably likely to see more range follow through to downside because you don't have that direct tie-in. From a treasury standpoint, yeah, everyone's still expecting the continued softening, and now the narrative has shifted where people are thinking more and more cuts because of what they see in the labor force and that. And I think they might be a little thrown off on job openings and things like that, simply because you're going to have this kind of rotation as we see changes in how the whole dynamic of capital investment and that shifts. Really, what you want to be looking at is what it does in construction, as well as housing, not as much simply because of where rates are currently at. I think that's muted for at least the rest of the year. Even if you get a rate reduction, it's going to take time for that to trickle through. But that's what we talked about. Like, by the end of the first quarter, second quarter of next year, you should see a significant impact from those effects. Now, oil obviously becomes an interesting one, and then we get into the bifurcation of energy, at least electricity versus what fuel costs are. And I think that one is going to be the coming big story. Most people probably aren't focused on it at this particular stage, but you'll see. From a euro standpoint, of course, they're still excited about the euro, and now you see that there's also the systemic risk now that's starting to build from a global standpoint as you see the EU really pushing towards this idea of confrontation with Russia, threatening to put troops in Ukraine, whether they call them defensive or otherwise. It still goes against the whole concept of NATO encroachment from a Russian viewpoint, and that just adds tension. The whole drone thing with Poland, it reminds you of the late 30s and these fake incursion situations. People call them with false flag thing now, but it's just a strange dynamic to see. Why now? You know, Nothing's changed. There's just zero desire from the parties from a peace standpoint, and it just looks uglier and uglier by the day for the Ukrainians. I think the EU is starting to recognize that, which is why their rhetoric seems to have gone to the upside. But from a popular support standpoint, I just don't see where they think they're going to get it from. But then again, how much do they really care about what people think anyway? It's not certainly something that's happening in the EU with the silencing of speech and everything else. And you know, it just shows you that you can see it and object to the levers of power moving things, but that's where they're moving things. And this idea that they've been planning for a war in the next 3 to 4 years, from European leaders have spoken out loud about this. Um, that's a threat to where the market is, and that's why we talk about it. Only because um, any of those kind of shocks could certainly be a significant move. Of course, we've already seen in gold the continued debasement situation. That isn't changing. And it's starting to light up the crypto space here. And you can see this is the short cover rally with the Bitcoin setup. Um, as relative as that can be, what we had was this reasonable amount of selling that was the shift to ETH. And with that being absorbed now, you still have a pretty strong demand from a lot of countries wanting to set up reserves, even the US talking about it in Bitcoin and that, where ETH has more of that tokenization practicality element. So each of them has their own space that is fuel for excitement from each of their camps. So it just becomes an alternative to what people see as debasement of regular currencies with deficits. Not surprising, and that's why you tie them all together. If crypto wasn't there, it would be gold, silver, and all your commodities. Same thing. From a 50K standpoint, we had saw the trade out from the dip of the magenta going, but we're just sideways action so far going across here, and rather muted because while you made new highs, you ended up with a much lower shakeout. That divergence, it does put the 50% into play, which also then you count your positive extremes going back. And that would get you into the low side here in the 27 range. So just worth noting. And we can see that, back to the option play. So, most of the day shooting up, and then at the end of the day, they filled it all back in, made everybody happy, cleared the books, and set up for the beginning of the week. The Asian session was fairly decent, but EU session, a lot more volatility. Uh, and again, I think that though, as the war drum starts to beat and those kind of behaviors are more known, I think it's going to be an interesting one. Trump really putting pressure on the EU to stop buying cheap Russian oil at the same time claiming you're going to be at war with them is an interesting one. Uh, it's not necessarily wrong. It's just he's trying to promote the sales of U.S. energy. Uh, we'll see how that one plays out. The EU is stuck because at the end of the day they need that energy because all the green initiatives they push to are just driving their economies into the hole. So there's that element, and um, as much as everyone wants to talk about the dollar collapse, it really got to question whether the EU can survive for extended periods of time given the directions they're headed. So, a whole separate issue. But from a reading standpoint, the threat becomes one of these anomalies taking place in those situations, and anything else developing in the Red Sea, Iran. There's plenty of them. Nothing's happened at this particular stage, so you can't worry about what isn't. But you have to take into account that those potentials exist. So, as always, though, anything relevant, I will put it on our team chat. Have a good one. Trade well.